Hello, everyone, and welcome to Money and Investing Talk with Ali Shahraki and Kian. In this session, we want to be talking about something very important, something you might be asking yourself all the time. What is trading? What is investing? What's the difference? Is it all of them the same? No, they are not the same. So in this session, we're going to be asking the question, what's the difference between trading and investing? And let's see if Kian knows what's the difference between investing and trading. What's the difference?
I don't really know a lot about investing and all this stuff, but I think investing, trading is it when you give something to someone and then they give you something back,
No,
and then investing is when you put a certain amount of money into the market and then you're receiving a certain amount back.
That is very interesting because he actually knows how to read the chart. He knows how to make decision on the chart, and he knows how to do trading and investing, both of them. But he doesn't know the difference. So that's why I didn't gave him the answer before. And I said, you know what? That's a good question. We're gonna be having this discussion live on air, and I'm gonna explain to you live on air. Now, what I'm gonna be explaining here is the trading first. So the trading is when you put money in and is in a short term, like in a lower time frame. So when you are doing trading, when you are buying and selling shares and stocks, you trade in a different time frame. Now, if you are in a time frame of 4 hours or one day or half an hours or 1 hours, you are trading. That means you're gonna get in today, you're gonna use the volatility of the market just today, and you're gonna get out at the end of the day using the volatility and take your profit at the end of the day. Maximum is gonna take 2 days. But when you are saying you are investing, you actually investing is more longer term. I would say is more than 6 months. You want to buy something and wait for the price of that thing to go up, and usually it takes minimum of 6 months or 1 year for the price to go up. For example, like property, you buy the property, you wait 1 year, and then maybe 5% goes up in that 1 year. Now, some of the investment, long-term investment I have, they go up like guarantee 14% to 20% every year long term. And many people don't know how to do this kind of investment because they haven't got the knowledge for it, but they just know property. And property is the lowest long-term investment, and it gives you the lowest return. The only good thing about property is the leverage. You can use banks money to keep buying more property. But one property itself, the money is going to give you is about 4 or 5% a year if the property market goes up. But there are different ways. As an investor, a professional investor, if you are earning less than 12% a year on your money, you are not investing it properly. That's what we call investing. And you buy something, you put it there, you leave it there, and every year, you get the interest and you get the return on it. But if you're a trader, you have sum of money inside the market. You keep going in, coming out, going in, coming out during 1 day or maximum 2 days, and you keep buying and selling the same thing. Maybe you buy and sell in the same market. While it goes up in that day, you just buying it and you profit, and then it gets stopped and it's gonna come down. Now you're selling it, and then you buy again at the bottom, and then you keep making profit like that. That's the difference between trading and investing. Putting in short, really. Trading is short term and more gain. Investing is long term, less gain. But there is only also one thing. Investing is more safer. Trading is more risky. You take more risk. When you are trading, you risk more. Obviously, more you risk, more you make. Investing, now again, same thing in investing. Like if you buy in a property, you're taking the lowest risk ever, and that's why you are having the lowest return ever. But if you are going inside the stock market, then you are taking more risk, so you're having more higher risk. If you're buying gold, silver, whiskey, wine, each one of them have their own risk, and we teach all this inside our courses. It's impossible to talk about it here, live in public, uh, because I'm not financial advisor. I can't teach this stuff in public to people and explain to people about this stuff, because only financial advisor can check your individual situation and give you individual advice. Now, me giving this advice on public without knowing your uh, situation, that count as financial advice, and I can't give you financial advice, obviously, because I don't know what your situation is and I haven't assessed your situation. But this is a general view of investing and trading. Now, trading is more of a job. You might have to, while your money is in the market, you put the money in. If it's on a 15-minute chart, you can't just leave it and just go. You got to sit there and you got to watch it. But if it's like on 4-hour chart, you can put the money in there and you can come back and check it every 4 hours. If it's on the daily chart, you can come back and check it every day. So you can literally put it in at 10 o'clock night, and then you come back the next day at 10 o'clock and you check to see, if you have the profit, and you take the profit. If you are on a half an hour chart, you have to check it every half an hour. So that means if you're on a 15-minute chart, for example, you have to check the candles, you have to check the account every 15 minutes. Now that makes it to be a full-time job if you're on a 15-minute chart. So sometimes I get in the market at 8 o'clock or 9 o'clock in the morning. By 10 o'clock, I'm out. I made my profit, I made my 300-400 pound at least, get out, done, finish. Or 2:30, I get in, by 4 o'clock, I'm out. That's it. So that's my trading. But then the money I made from there, I put it inside a long-term investment, and I buy, for example, gold, silver, uh, in a different market at a different time frame with different risk. uh, so I have my eggs in different baskets, and that's how it's growing. Is that more clear? So
Yeah.
what's the difference between trading and investing?
Trading is
Short term,
short term, and then investing is long term.
long
For
term.
example, like property.
Exactly. But the difference is investing gives you less return, trading gives you more return. But also trading is more risky and investing is less risky.
Yeah.
Also, each of the risk of the investing is different. So property market's got different risk, gold market's got different risk, silver's got different risk, petroleum, oil, all this market, they have their own different risk, and everything depends on your situation and how you feel. And that's why when people want to join our courses, we have like 1 hour's interview with them to see where they are first and if it's suitable for them or not, because we don't want people just come and join our courses if it's not right for them. I hope this has been useful to you guys. I hope we gave enough information. Yeah, and that's the difference between trading and investing. Please, if you like our podcast, like our page, subscribe to our channel, ask any question, drop in any comment you have, and we love to answer your questions. Um, Also follow our YouTube channel, so we uploading more videos there if you are interested on YouTube, and you follow stuff on YouTube. Also our podcast, the link is inside the post. Subscribe to our podcast, uh, and encourage us if you think we should continue with this podcast and give this information out to people and educate people about money and investing. Let us know, so we know this is what people want from us, and we continue doing it. Appreciate your time, and see you in the next podcast.